All right, good morning, everyone. Thank you for joining us for our best practices not for nonprofit organizations panel discussion. I'm Amanda Gerber, Marketing Director here at DWD. We thought holding this panel would be a good opportunity for some of you to get to know our team a little bit better, and also to give us an opportunity to share some of the commonly asked questions we get. Also wanted to thank those of you who submitted questions for our original panel discussion. We've incorporated those as well. To go ahead and get started, we are going to first learn a little bit about each of our team members. As you know, our nonprofit services team consists of 4 professionals here at DWD, Carrie Minnick, Phil McKenzie, Tyson Moore, and Audrey Lemon. So at this time, we are going to start getting to know each of them just a little bit. And then just to give you a heads up on what to expect. So we've kind of organized all of the different questions into categories. So we're trying to lump similar topics together as we address them. And then I wanted to invite you at any time during the presentation, if you have questions, please use the Q&A feature. And when we get to the end of one category, I will take a moment to review those and we can hopefully have some time for extra questions at that time. The first person to introduce is Carrie. She is the partner who oversees our nonprofit services team. Carrie, question for you. Have you always worked with nonprofits?
For most of my career, I have. When I first started in public accounting, I did, for those first 2 years, I was at a different firm actually in Indianapolis. And I did have some experience working kind of in all areas with all industries. But once I came to DWD, I pretty much have just focused on only nonprofits. And that's probably been about since 2004.
Oh, wow. Carrie, what boards are you currently serving on?
So currently I am on the Turnstone board as well as the governance committee and the audit committee for Turnstone. I just finished up a year serving as the chair of the state CPA society. So during that period, I did take some time off of some other boards. And so currently I am just serving on the Turnstone board.
Okay. Can you tell us a little bit about things you enjoy outside of work, outside of the firm?
So when I'm not working, you will probably find me a lot of times on the trails. I love to run and sometimes walk on the trails, specifically the Puffer Belly. My husband, John, who's also a CPA, also joins me some. So we just like to kind of get outside and get away from electronics and enjoy the nature and get some exercise.
Thanks, Carrie. Phil. Phil is a director here on our nonprofit services team. The first questions I have for you, Phil, what do you enjoy the most working with the different nonprofit organizations?
Well, there's a lot there. I think, obviously I started out working for a nonprofit, so I got to know kind of what nonprofits do that way and the missions that they have. But I think, the one thing that I always keep coming back to is you get to know the people behind the scenes that make the nonprofit run, and you see their passion for their mission and what they put into it. So I think being an accountant and a CPA and an auditor, a consultant to these nonprofits, being a part of their process of performing the audit, I think just in some small way helps us get connected to them that way. And just being able to provide not only an audit for them, but also consulting with them on internal controls or best practices on policies. I think, again, just almost feeling like part of the nonprofit themselves when you're an auditor, just knowing that they're doing great things for the community. So I think that's always what's attracted me and keeps me wanting to work with them.
Can you tell us a little bit about what you enjoy outside of work?
Sure. Yeah, it just really, I'm looking at the pictures there. Obviously, growing up with 4 boys, we had lots of animals, but outside of work, just spending as much time with my wife and our 4 boys. We're huge sports fans, and so we try to go as many sporting events as possible. My wife and I are also very connected, or like a lot of the same music. So we try to go as many concerts as possible too, on our own, and try to get up to Michigan to visit family. So that kind of keeps us busy outside of work.
Thank you, Phil.
Yep.
Oops. Next, we have Tyson Moore, who is a supervisor on our nonprofit team. Tyson, how many years have you been with DWD?
It's been coming up on 7 years now, in November.
And remind us, where were you at before coming to DWD?
Yeah, so before coming to DWD, I started my accounting career with United Way of Allen County. I was there a couple years while I sat for my CPA exam before coming to DWD.
Okay. So the next question, I guess it sounds like you've always worked pretty closely with the different nonprofits.
Pretty much, yeah. Actually, right out of college, I did have a very small internship at a for-profit manufacturing facility, but yeah, the large part has been with not-for-profit organizations.
Can you tell us a little bit about what you enjoy outside of work?
Yeah, so I grew up in Flint, Michigan, so I'm a big Michigan sports fan. So Michigan Wolverines, Detroit Lions, Detroit Tigers, which all three of those are actually pretty decent teams right now, which is kind of nice. I don't think that's happened in my whole life, that those three have been good at the same time. I have a 5-year-old daughter. You can see the pictures up there. So when I'm not watching sports, I'm usually chasing her around. She likes rocks right now. So we're really into collecting rocks. My living room is filled with rocks. Some of them have been tumbled in a tumbler. Some of them are painted bright colors. So I guess when anyone comes over to visit me, I always say, be careful. We have inside rocks and we have outside rocks. So these are my inside rocks that we have now. So yeah, she keeps me busy.
Thank you, Tyson.
Mhm.
And next we have Audrey, who is a senior here on our team. Audrey, how many years have you been with the firm?
I started at DWD in January of 23, so coming up on my 2-year mark.
And what do you enjoy most about working with nonprofits?
I really enjoy working with nonprofits because I feel like we're helping them more than just giving them their audit that they need or anything. I think nonprofits are really focused on their missions, which is amazing because they do a lot of great work for the community, but most of the time their mission does not include knowing a lot about accounting or knowing what all needs to be done with the different policies that need to be in place and stuff. So I like working with them because I feel like by us helping with their accounting questions and with their policies and internal controls that they're maybe not as knowledgeable about, we're helping them to better serve their mission of actually going out into the community and helping. So I enjoy nonprofits because I feel like it's my way of giving back.
Audrey, can you tell us a little bit about what you do outside of work?
Most of my time is spent watching the Iowa Hawkeyes, and then watching teams that they play so that I can know what's upcoming for later on in the season. My dad is from Iowa, so I've been a diehard Iowa fan my whole life. I am getting married in like 28 days. And so that's been a big, a lot of my free time right now is going towards wedding stuff, but my fiance is a huge Indiana Hoosiers fan. So unfortunately, I've had to be a little bit more knowledgeable about their teams as well. But it's good because now I can watch Iowa when they come to play IU and stuff. We have a dog that is like our child. And so a lot of our free time too is spent around taking her for walks or taking her to different dog parks and stuff. And then I love to read. So it takes up most of my weekends.
Thanks, Audrey. Okay, getting right into our panel discussion. Like I had mentioned, we divided the different questions into categories: audit, board members, 990, government funding, and then a kind of a miscellaneous catch-all. So we will dive right into our first questions pertaining to audits. Common question we often get, what triggers an audit? Bill, could you answer that for us?
Sure. Yeah, I think in my experience, there's kind of four things that probably is the trigger for a nonprofit having to have an audit. I think the most common one that we run into is just the funding sources that nonprofits are going out to request grants from, specifically foundations. That is more than likely the reason for a lot of nonprofits audits being required. There may be in the rare circumstances that other funding sources like a business or an individual that's giving a large gift may request one, but a lot of times it's the funding source that's triggering it. There also could be regulatory requirements, also kind of based on funding with governmental funding specifically. Could be federal government funds that the organization's receiving a certain level of that, or it could be even the state of Indiana has certain requirements that require organizations to have an audit if they're receiving government funds. So those could be a possible trigger, but for organizations that don't receive governmental funds or may not apply to foundations for grants, it may just be in their bylaws that they're required to have an audit every year, or perhaps every 3 years or 5 years. So just be mindful of what your bylaws state and then make sure you're complying with that. The only other, in very rare circumstances too, you don't see it too much with nonprofits, is could be their financing. Maybe a renovation to a building, or adding on, or even building a new building. So it could be a bank that's requiring the audit, or even more recently, the new market tax credits have become more and more popular as a way to finance large projects, so they could require an audit.
Next question. What does an audit do and what an audit does not do? Tyson?
Yes, so I'll start with what an audit does. So an audit's going to provide reasonable assurance that your financial statements are free from material misstatement. Another thing an audit is going to give you is we're going to assess your systems, your control systems, and provide ways to improve those. So if you're an audit client, at the end of an audit, you might see a SAS 115 letter that we'll issue. And in that letter, we're going to have different recommendations for your organization based on what we saw during the audit. So we may say that there's certain policies that we didn't see in place that should probably be put into place. We also may make suggestions to tweak internal controls to be a little bit better. So you'll see those in that letter. What an audit doesn't do. So it doesn't provide absolute assurance that your financial statements are free from material misstatements. So like I said before, it does provide a reasonable assurance. We do not review every transaction either. Some places think that an audit, because it's an audit, we're going to dive into every single transaction you've done all year long and make changes to every single one of those transactions if we find that it isn't correct. Well, during an audit, we do set a scope during our audit. That's based on the size of the organization. And so we're not going to look at every single transaction that you've done during the year. And another thing is that an audit does not specifically look for fraud. So we do a lot of testing during an audit, and along the way, we could find fraud, and sometimes audits do find fraud, but specifically an audit's not designed to find fraud. So that can be a misconception sometimes.
Next question. How should I best prepare for an audit? Carrie, could you answer that for us?
Sure. So I think most of you joining us today probably already have an audit done. So you have gone through the process and you know what to expect. But I think there's still some tips that we can always learn to improve the process. An audit, as you know, is the highest level of assurance. So it takes a lot of work, not only from the auditor side, but also from the auditee side to prepare for it. What we try and do is send out a list of items that we need for the audit prior to coming on site for field work or prior to when we do field work in the office. This list includes most of what we need. However, there's always going to be other additional questions that pop up. So making sure that you have those items prepared, organized, ready for us to look at when we start the audit just makes the audit go much, much smoother than if we have to keep asking for those items. It's also, you know, if we have to keep asking for it, we have to keep interrupting you and your staff throughout the day as well. So having those items organized and ready for us when we come out. Also, not only having those ready for field work, but, you know, throughout the year, making sure that entries are done, you know, at the end of each month, making sure that transactions are recorded properly, kind of making sure that you have policies and procedures in place. Tyson mentioned the SAS 115 letter that we issue at the end of the audit. So if there are recommendations in there that we've made to your organization, kind of going through and addressing those, how are you going to implement those into your organization throughout the year, not waiting until the end of the year. And then finally, if things do come up during the year, you know, if you have a situation where a transaction happens that you've not had before, please reach out to us during the year. That's what we're here for. We really want the audit process to not just end after field work. We want to be a resource for you throughout the entire year. So that way, when you do have questions or things come up during the year, we can address them right then, as opposed to waiting until the end of the year, because a lot of stuff happens between the middle of the year and the end of the year. And it's just much easier to address those things when they actually happen. And then finally too, you know, if you have something new that happens during the year, you've changed your policies or procedures, or you've redone your chart of accounts, which hopefully that doesn't happen often, but sometimes it does. So when you do have those things that change, just letting us know before we do the audit, it kind of gives us a heads up. So there may be some additional testing that needs to be done. So if there are new things that happen during the year, just communicating those with us.
Audrey, are there any tips for remote audits that you could share?
Yes, I think remote audits can be very convenient. We don't have to go out to you. You don't have to make room for us, but I think oftentimes it can get a little messy. And so the more that you can do on your end to keep things organized and cleanly labeled, the easier we can sort through things. Whether it's electronic, or sometimes we have remote audits where clients will bring in like boxes of paper. As long as we know what we're looking at, it can be a lot smoother than us slipping through all the pieces of paper or pages in a PDF, not really sure what we're looking at, figuring that out, and then getting started on our testing. So if things are organized and clearly labeled, it can make our testing go a lot smoother. A remote audit is also not for everyone. So I guess just kind of keep in mind what you think would work best for your organization. One of the benefits of us being on site is that you're there and available for us to ask you questions. So if you do go the remote audit route, just make sure that you're available to answer emails or phone calls when we do have questions that come up, because whether it's remote or in person, we'll probably have some follow-up questions for you. And I guess with that, a benefit of remote audits is that you can continue to do your work for your organization while we are performing the audit, but just letting maybe those who work around you and stuff know that I will be working today, but I also am dealing with an audit. So that way, when we do have questions, we don't have to ask it, wait for an answer, and then come back to it after a while. The more you're available and able to answer those things, the quicker we can get through our stuff and hopefully get you some answers.
Okay, that wraps up the questions in our audit category. It doesn't look like we had any questions submitted. So we will move into the next category, board members. A very common question: how should I record or recruit new board members? Audrey?
So with new board members, that needs to be a continually ongoing process. Sometimes there's a limit to how many board members your organization says you're allowed to have. So even if you're at that limit, you need to be continually thinking about who would be a good fit to step in when someone's ready to step down. One way to test if someone is a good fit is to have them first serve on a committee. Not only can you see if they would be a good fit for your board, but then they're able to see, is this an organization that I maybe want to start serving on the board with? So it's a good opportunity to see if it works for both sides. It's also the board's responsibility to recruit new board members. I think sometimes it gets pushed onto the executive directors, but at the end of the day, it's the board's responsibility. So they need to be thinking about who's in my circle of people that I think could be a good fit, maybe from other professional experiences. And it's also important to think about looking for someone that knows a little bit about the programming that you do. So if you're more of a childcare education based programming, looking for someone who maybe has experience in education or in childcare, versus if you are a medical programming organization, maybe looking for more doctors, nurses, someone who's going to understand the process that your organization is going to go through and can maybe offer some additional insight. I know Fort Wayne has a couple organizations that help find new board members. So Leadership Fort Wayne and YLNI will provide some internship opportunities for board members. But even going on LinkedIn is a great way to find people too. You can I think LinkedIn has you put different things that you're interested in, but just finding people who maybe have worked on similar boards in the past or who have a little bit of experience with your type of organization and the way you guys run things. I guess, oh, sorry, just one thing to caution about though. If you're looking for a new board member and you think you found someone, but they maybe serve on 10 or 12 boards, just be cautious of that, because at the end of the day, you want to find board members that have the ability to invest their time and energy into your company. So if they are on too many boards, you just kind of want to be wary of that to make sure that you can still be a priority to them too.
How involved should board members be in the audit process? Tyson, can you answer that for us?
Yes, so the level of involvement, it really depends on the size and the structure of the organization. So bigger organizations might have an audit committee or a finance committee that might take charge of that audit process, while smaller organizations are probably just going to have the board there to kind of deal with that. One key here is best practices say that, so for an audit, you should probably have an exit meeting with your auditor. That should be done without management in the room. So if this is done, let's say at a board meeting, and there's people from management there, there's the board, that should probably be done without the management there. There should be at least a portion of that where that the auditor can talk to the board without management there. So sometimes in practice, we do present to the finance committees, we present to audits and boards, but sometimes we also just present to the ED or the CFO, and they end up presenting that information to the board. So I guess to sum up the answer there, it really just kind of depends on the size and the structure of each organization.
Should our board be involved in internal controls? Bill?
Well, the short and simple answer is yes. I think kind of following up what Tyson mentioned is that similar to the size of the nonprofit, the number of people in your organization's accounting department, and also maybe their skills and experience are going to kind of dictate maybe how much your board needs to get involved with internal controls and at what level. So obviously the smaller the group that's handling the financial transactions for the organization, then probably the more involvement that the board's gonna have to be involved with, kind of more of the daily or monthly routines, processes of the organization. So, and that could be, if it's a small group of in the accounting department, it could be signing checks, reviewing bank reconciliations at the end of the month, reviewing journal entries. So there could be various levels of involvement. It's usually the board treasurer or someone maybe on a subcommittee that may get involved too. But ultimately, the size of how many people are handling the transactions and how well you can segregate duties as well will drive how much your board's involved. From a larger kind of perspective, I think the board, no matter what size your nonprofit, should always be during board meetings or before board meetings reviewing the financials at the end of the month, reviewing those and understanding them, asking questions. Also should be reviewing and improving the annual budget. I don't think that the size of the organization or number of people in the accounting department would impact that. That should be something that the board should always be involved in. And ultimately the policies and procedures that are kind of put out for the organization that should be followed. The board should be either considering and adopting new ones and also reviewing existing ones on a regular basis to make sure those don't need to be updated. But I think those are definitely some ways that boards should be involved at some level in internal control for your organization.
Please help us understand board responsibilities versus executive director responsibilities. Carrie?
Yeah, so this is an area I think that can get very messy. The making sure that the board understands its responsibilities and doesn't overstep into the executive director or the staff responsibilities. So, we talk about having really two types of boards, working boards and then governing boards. Obviously, all boards are governing boards and working boards, but sometimes you have boards that the working boards are more, they're actually more involved in the day-to-day operations of the organization because the organization may not be adequately staffed, or maybe it's all run by volunteers. So their responsibilities are going to be a little bit different versus an oversight or a governing board. But regardless of what type of board and the size of your organizations, there are some basic responsibilities that all board members have. Obviously, we have the legal responsibilities, the duty of care, duty of loyalty, and duty of obedience, where basically you're thinking about the organization first, putting the organization before any personal priorities or anything like that. And then we talk about financial responsibilities, and Phil just touched on this. As a board member, you need to really make sure that you're understanding the organization's financials. You are ultimately responsible for the organization as a board member. So not only, like Phil said, reviewing the financial statements monthly, quarterly, annually, approving the budget, making sure the organization is in compliance with grants. Now, obviously, you're going to have staff that actually carry out and do the transactions, record the transactions into the accounting system, prepare the financial statements, propose the budget, put the budget together, and then also doing the grant reporting. But it's ultimately the board to provide that additional oversight to make sure all of those things get done. And then we kind of get into management responsibilities. And I think one thing that your boards need to always remember is that boards have one employee. They have hired one person, the executive director or the CEO, and they are responsible only for that one person. So the executive director is responsible for all the rest of the staff. So when we're, as a board member, evaluating staff, we are only responsible for that one person, the executive director. So then when we get into the areas of what, maybe the board shouldn't be stepping into, that involves, like I said, the hiring, the supervising and evaluating staff. Again, that is the executive director's job. That is not the board's responsibilities to get into that day-to-day activity. Developing and implementing programs. Again, that is more of an executive director led initiative carried out by the staff. Obviously, the board needs to be aware of what the organization's programs are, If there are significant changes, the board should probably approve those, or if the organization has decided to go in a different direction. But actually carrying out those programs, that's the staff's job. Fundraising is a big one, and I think that there's another question on that, but that is also mainly carried out by the executive director. Again, the board should be involved, but most oftentimes there's an internal development director or a fundraiser that's in charge of that. And then fundraising staff. Marketing, preparing the annual budget, financial reporting, all of that day-to-day stuff really needs to be done by the executive director and the staff. The board is more high-level strategic, making sure things are getting done, kind of providing a roadmap for the staff, but the actual execution really needs to be done by the executive director and the staff. And I think that is something that sometimes, especially new board members, might not understand. They might want to get too much into the weeds sometimes. So just making sure that your board members clearly understand their responsibilities. Oftentimes nonprofits will have a board, an actual document that they have their board members signed called a board member responsibilities that kind of talks about these different things. Also training for new board members so they understand these are our responsibilities versus this is what the executive director is going to lead with the staff.
Okay, you kind of covered a little bit on the topic of fundraising, the executive director or board responsibilities. Did you have anything else to add to that, Carrie?
Yeah, so, when we talk about fundraising, obviously, board members are ultimately responsible to making sure that there's adequate financial resources for the organization. So how that gets done can vary from organization to organization, depending on the size of the organization. So those organizations that are large enough to have a internal fundraiser or development person, they're probably going to have that person more so focus on the fundraising and their staff. Whereas if it is a all volunteer-led organization, your board members, they're probably going to do more fundraising. Regardless of the size and the number of staff that the nonprofit has, though, there are some things that all board members should do related to fundraising. For example, making a personal contribution to the organization. Funders look at that. Oftentimes they don't necessarily look at the dollar amount, but they look at the percentage of board members that give to the organization. Their thought is if your board is not donating to your organization, why should we as an external person? So again, making sure that all of your board members do contribute something to the nonprofit. Attending fundraising events. Most oftentimes there are special events that every nonprofit has. So being involved in that, inviting their other colleagues, friends, and family to that, sharing information about the organization, whether it be on social media or being able to, when you're interacting at work or with your family and friends, so you can clearly state what that organization does. So again, just, sharing what that organization does with others, especially if you have personal stories, more likely to get more people to give to the organization. And then also, making introductions to possible donors. So maybe within your, maybe you serve on another nonprofit, or maybe you're involved with certain things in the community and you come aware of certain grant opportunities, or you are involved in like a Rotary type event and you have speakers come. So inviting the executive director, the CEO to come and speak at those events, or setting up a meeting for those key people within the community. So that way they are able to share the story of the nonprofit and get more people to know about the organization and then ultimately give and contribute to the organization.
Okay, thanks, Carrie. Another common question, does my board treasurer need to be a CPA? Audrey?
No, it is not a requirement, but your board treasurer does need to have a financial background of some sort. I will say that nonprofit accounting is very different than for-profit accounting. So if you can find someone that maybe has some experience understanding nonprofit financials and the things that they do differently, like restrictions, pledges receivable, different grant requirements and disclosures. If you have someone that's knowledgeable in that, that is a lot more beneficial than having a CPA who just does personal taxes. Just because the letters CPA are after a name doesn't mean that they're necessarily the best option for you. Your board treasurer needs to be able to provide proper oversight. So if they don't understand nonprofit accounting and some of the variances that happen with that, that could become an issue because they're not able to provide the proper oversight that's needed. It also could be helpful if they have experience in your specific programming, like we talked about earlier. So if you can find someone that has experience in your programming and understands nonprofit accounting, that's ideal, but they are not required to be a CPA.
Okay, thanks, Audrey. It looks like there are no questions related to board members at this time. So we are going to move into our next category, Form 990. Tyson, can you tell us a little bit what is so important about Form 990?
This is kind of a loaded question. I think some people see the 990 kind of as a something they need to check off a to-do list for the year. And that's true. It has to be done. It needs to happen. But there's some other things going on here that make it important as well. So if you don't file your 990 for 3 years in a row, you lose your nonprofit exemption. So that's a big deal. So that's one really good reason why it needs to be filed. Another good reason is that this is a public document. And anybody can pull up your 990. So this could be funders. This could be potential donors. This could be potential employees. This could be board members or potential board members that can pull this up. So a lot of times this could be the first piece of communication that you have with a potential funder or a board member. So it's really important that the 990 tells your story and it's accurate because so many eyes can be on it. I know I joined a board not too long ago, and the first thing I did was pull up a 990 and read their program service accomplishments and kind of figure out what the organization did. And you can see your financials there as well. That leads me into the next part, which is the program service accomplishment wording. So this is a set of it kind of usually, it can be really small if you want it to be, but a lot of places, if they do it well, it can be a few paragraphs that talk about different things that happen during the year. It can be how many clients you served. It should really tell the story of what happened during that year. And if you haven't looked at this wording in a while, and maybe you've just been updating some of the numbers in there to reflect the current year, that might be something that's worth looking into, because when somebody reads this, especially if somebody doesn't have a financial background, they may skip a lot of the financial information in your 990. And the one thing that they can read and understand is the program service accomplishment wording. So if you haven't looked at that in a while, this might be a good year to kind of take a look at that.
Okay. Does my board need to review Form 990? Audrey, can you answer that?
Yes, they do need to review it. There's actually a question on the 990 asking if your board reviews it. So if the IRS is asking if it's been done, it should probably be done. In order to check yes to that question and say that the board has reviewed it, all board members need to be provided the full 990, all of the schedules, even Schedule B where it's listing donors and their addresses and stuff. They don't need to officially sign off as saying, yes, I approve, this other person also approves, but they need to be provided the opportunity to read through the 990 and all of the schedules. If a board member doesn't understand the 990, it is perfectly okay to ask questions. You can either ask your other board members. If we prepared your 990, you can come and ask us questions. I think like Carrie mentioned, at the end of the day, you are responsible for the organization. And so one of those things is making sure you understand the Form 990 and that it is accurately reflecting your organization. Your names are listed as a board member on the 990 and it is available to public inspection. So if it were me, I would want to review that before it is getting put out to the public, just to make sure that I agree with what's on there and stuff.
Okay. What is the importance of the board approving minutes and the consent agenda? Bill, can you answer that, please?
Sure. I think this kind of, this fits obviously into the 990 area, because, like Audrey mentioned, and Tyson as well mentioned, there's several questions about, governance and policies that are in place for the organization. And one of those questions is, does the board, document their minutes, in writing? And so, while we go out and audit and we review board minutes for the year, sometimes we don't see the official, approval, in the subsequent meetings minutes that those minutes were approved. And that's important because, until those minutes from the previous meeting are approved and in the current meeting minutes, it's technically not official. It's in draft form. So there's no verification really that the meeting actually occurred or the decisions made were approved. So, that's why we always kind of look for, the approval, usually at the top of the agenda. That's, discussing the prior meeting minutes is in there, but, it's very important to have at least a discussion, review of those prior meeting minutes, any changes that need to be made, and then eventually, a motion to approve them, and then, note that approval in the minutes. So, for sure, that's a major thing. And as Audrey mentioned, if the IRS is looking for you to answer yes on that, hopefully, then it probably should be done. And also from an auditor's perspective, I think, we like to see that as, part of the governance carrying out their duties. Another item that we don't see used in terms of minutes, a lot, but I have seen it more recently, is a consent agenda. Like previous meeting minutes, the consent agenda should also be, should be a motion made during a meeting to approve those, items that are included in a consent agenda. And one thing that when we're looking through an audit where a board is using, the consent agenda to maybe cover those items that are routine, don't really require much discussion. Those can be subcommittee minutes, could be the prior or the most recent monthly financials, just normal things like that aren't typically, really discussed a lot. Is that you list those out on the board minutes, what consists of the consent agenda that you're approving. A lot of times we'll just see a single line that says the consent agenda was, approved, but we really need to see what is being, considered in the consent agenda. So it's a good way to make your meetings more efficient and allow you to focus on kind of maybe more important issues, jump into those and dive into those a little more in depth, and ultimately, allows for better governance of your nonprofit.
Now we will move into some questions relating to government funding. When do I need a single audit? Tyson?
Yes. So it used to be when you expend over $750,000 in government funding, and recently, starting October 1st of 2024, they moved that amount to $1 million. I just want to emphasize one thing in that wording. So it's when you expend more than $1 million now in government funding. So you can receive more than that, and still not have to have a single audit. It's not until you expend that amount in that fiscal year.
Okay. What do I need to do differently if I receive government funding? Carrie?
So if your organization has not received government funding in the past, and that is something you're looking into, you just want to make sure that you are prepared to do that. There's a lot more reporting that needs to be done. So you want to make sure that you have staff that have time available to do this and that are also knowledgeable about what needs to be done. So if you get government funding, and when we talk about government funding, this is either money from the federal government, the state government, or a local government. It can also be funds that are passed through. So it could be federal money that's passed through to the state and then passed through to your organization. It could also be federal money that's passed through to the state to another nonprofit and then to you, or from the federal government to another nonprofit and then to you. So it looks when we talk about government funding, we're looking at where it is initiated from. So if you do get any type of federal, state, or local money, and for this purpose, we're talking about money coming in. So Tyson was talking about expenditures, but for what I'm talking about now, we're talking about actually receiving these funds. The state of Indiana requires you to file an annual form. It's called an E-1 that needs to be done online through the Indiana Gateway. It needs to be filed within 60 days after the end of your fiscal year. And what this does, the State Board of Accounts looks to see where you're getting your money from. So it asks you where you got all of that different government funding from. It also asks you how much you spent in total expenses during the year. And then they do a calculation. And if you meet this certain percentage, then they're going to require you to have an audit done. And this is just a regular financial statement audit. So they will notify you that you need to have this audit done. And then you'll also need to provide that audit to them after the audit is done. In some circumstances, they might waive the audit, or you might not need an audit, but you might have to submit a copy of your 990, your Form 990. So they may ask you that. So the key is that if you do receive any kind of federal, state, or local funding and you're an Indiana organization, you do need to file that E-1 online through the Indiana Gateway with the State Board of Accounts within 60 days after the end of the year. Now, Tyson had also talked about the single audit. So as he mentioned, if you do expend $1 million or more effective October 1st, you do require a different kind of audit, a single audit. And then just also in general, there's a lot more reporting. So you really need to understand those government grants that you're getting. You really need to have somebody within your organization getting training on those, reading those grants, and getting the knowledge of what needs to be done, because there are different things that you need to track and report on in order to continue to get that government funding. So if it is something that you haven't done before, just make sure you really look into it before you jump into getting government funding.
Moving into our final category, kind of a miscellaneous catch-all. First question, how do I report changes to the IRS? Audrey?
So it kind of depends what the changes are. For something like a name change where you're just adding a doing business as, that can just be changed through your 990. So if we're doing your 990, let us know that changed. Same with the address, that can also just be changed through your 990. And it's really important to make sure that your address is up to date, because if the IRS has notices or letters that they need to send you, they are going to be sending it to the address listed on your 990. So when you're ready to change that, that needs to be currently up to date at all points. If it's something like changing your year end, so say you currently have a June 30th year end and you guys are now switching to a December 31st year end, that's also done through the 990. And the way we would do that is we would have to file a short year tax return. So we would file one from June or July 1st through 12/31. And then the next year we would file a full year 990. And that triggers the IRS to know, okay, their year end changed through that. So a lot of the changes are done through the 990, but you can also look on the IRS's website, and basically the IRS just needs to know what is happening for your organization.
Thanks, Audrey. What are the sales tax changes? Bill?
Yeah, the last 2-3 years, there's been kind of 3 primary changes that the state of Indiana has implemented for nonprofits and sales tax exemptions. The first one is most nonprofits up until this year had filed an annual return with the state of Indiana that kind of was a informational report, but it also kind of kept their sales tax exemption in place. Starting in 2024, they switched to now reporting every 5 years that you have to file this report. And with 2024, it kind of looks at the last 2 digits of your federal ID number. So some nonprofits will file this year, and then others will file in the next 3 years. And so going forward, the nonprofits that are filing this year will have to file in 24, but then they won't file again until 2029. So that is a change from the past. And this all kind of led into the state of Indiana also changing how you go about when you go purchase items using that sales tax exemption for your organization. So many people were used to using the form ST-105, which is something that, you know, you could download, print off, fill in the information and take to a vendor, and you could have the sales tax be exempt from your purchase. Well, the state of Indiana wanted to have, I think, a little more control over that. So now they've replaced that with a form NP-1. And I did mention before with the annual report, or excuse me, the not-for-profit organization report, this is all done online through your in-time account, which many of you may be familiar with your payroll being withheld and remitted. Those taxes are done through the in-time website. But so when you want to go to purchase something, you just log into your in-time account, put in the vendor information, what you're buying, and then send the request off to the Department of Revenue, and then they'll search to make sure you are tax exempt, and then provide that certificate that you'll give to the vendor to make your purchase, and then have the sales tax not be added on. So there is a new process. It's all electronic now. So just be aware of that. And then the third thing is kind of on the flip side, if you're selling tangible goods as part of your nonprofit mission to raise support, the threshold was initially $20,000. Now it's $100,000 in sales each year. If you do hit that $100,000 threshold, then you have to start withholding and remitting sales tax to the state of Indiana. And one thing to keep in mind is when you do hit that, if you should hit that in 2024, you have to be less than $100,000 for the next 2 years in order to stop withholding and remitting. So if you have questions on that, please reach out to us. But that's a lot of things going on with sales tax in the last few years. But so hopefully that there won't be much moving forward, but I think it's all for the good.
Next question, the unrelated business income, debt exemptions, rent, and advertising. Carrie, can you answer some common questions related to this?
Yes, so unrelated business income is a very gray area, and it really depends on the circumstances of your organization. So what unrelated business income is, 3 things have to be in place. First of all, the activity has to be a trade or business. The activity is regularly carried on, and it is not substantially related to your exempt purpose. So what this means is that if you're getting revenue from some activity that has all of these 3 items, they have to have all 3 items in order for it to be considered unrelated business income, then you have to pay unrelated business income tax on this revenue. The IRS does not care what you do with this revenue. It does not matter that all of this revenue is going back into further your exemption. They are focused on what activity is creating this revenue. So what we do is we look at the revenue. If it's unrelated, then we are able to take some deductions. There's a $1,000 standard deduction that comes off of your revenue, the gross revenue. And then there are also some, we can deduct some related expenses as well to get down to what the net UBI is. And then you're going to pay corporate income tax on it, just like any other corporation does. So it is okay to have some unrelated business income. It's a great additional source of revenue for nonprofits. However, the IRS doesn't like it when your organization has too much unrelated business income. If you have too much unrelated business income, the IRS may take away your tax exemption. So some common unrelated business income items, advertising. So if you issue some type of booklet and you go out and buy advertising, then that is considered unrelated business income. If you sell logo items, t-shirts, coffee mugs, that kind of thing, that's really considered unrelated business income. If you have a building that has a mortgage on it and you're renting out that a piece of or a portion of that building and you're receiving rent income on that, that rent income is considered unrelated business income. So those are kind of some common ones. There are some specific exemptions, for example, like your logo items, if those are primarily sold by volunteers, not employees, they're not getting paid. That is exempted from unrelated business income. So the key here is making sure that you know where any new revenue is coming from within your organization, how is it being created, and then determining if it is unrelated business income. So again, it really depends on the organization. What organization A is considered unrelated business income might not be unrelated business income to organization B. So you really need to look at what the circumstances are that are surrounding that activity within your organization. And if you have questions on that, please reach out to us. We're happy to help you evaluate that to determine whether we think that's unrelated business income or not, because you will have to file a 990T with the IRS and report that income and pay those taxes.
Thanks, Carrie. Moving into our last question, after we answer this last question, we would have a couple of minutes. If anyone has any other questions that have generated during the presentation, we would be happy to take a minute to address those. Okay, the last question. What is considered a related party? Tyson, can you answer that for us?
Yes, so here's a kind of a broad definition of a related party. So these are going to be transactions with any person or entity that has control within your organization. So what that kind of means in reality, the biggest pool of related party transactions are probably going to be coming from board members or key employees. And you can see these listed on your 990 in Part 7. This also could be any of their spouses would also be considered related parties. Also, any business that any of those people would be an owner in, those would also be considered related parties. Another instance that might happen is that if you create a foundation and it was set up to support your organization, any transactions with that organization would also be considered related. So this leads into how a board member would disclose any of this information. And board members should be required annually to sign a conflict of interest form. This form it's a place for a board member basically to tell you any conflicts that might be there between them and your organization. The 990 asks if your board members sign this annually, but it also asks how that's enforced within your organization. So what happens if there is a conflict? And when it arises, what does your organization do? So be sure you document that process as well and make sure that's part of your 990. But generally, this means that that person wouldn't vote on any issues related to that specific issue. So whatever issue that they disclosed, they wouldn't vote on that issue. They also wouldn't be part of conversations if it happened to relate to that situation. So just make sure that that's documented and it's included on your 990.
Okay, that concludes our panel discussion for today. Thank you all so much for taking the time to join us. Just wanted to remind you, not only are our website a resource to you, but so is our nonprofit services team. So if you have questions that arise, please reach out. You know, we're happy to be here for you and to help your organization. Again, thank you so much for your time this morning. Carrie, did you have anything you wanted to add?
Nope, I just again want to thank you all for joining us. We are very appreciative of your relationship with DWD. We really enjoy working with you all. And like it was talked about earlier, I think we all have a passion for working with nonprofits and seeing what you guys do in the community and hopefully being a little piece of that. So if there is ever anything that we can help you with, please don't hesitate to reach out to any of us. So thank you so much.